YASIN. Are REITs halal or haram? Assalamualaikum warahmatullahi wabarakatuh and good afternoon everyone. I am RAZNEE ATISYA and you are with me in this Bulletin 5. REITs, halal or haram? Real Estate Investment Trust or REITs is a company that owns, operates or finances income-generating real estate. Model after mutual fund, REITs pool the capital of numerous investors. This makes it possible for individual investors to earn dividend from real estate investments without having to buy, manage or finance property themselves. Property in a way REIT portfolio can range from apartment complexes and hotels to cell towers. Many REITs are publicly traded on major security exchanges like Bursa Malaysia, and investors can buy and sell them like stocks throughout the trading session. These REITs typically trade under substantial volume and are considered very liquid instruments. To qualify as a REIT, a company must comply with a certain provision in the Internal Revenue Code (IRC). These requirements include to primarily own income-generating real estate for the long term and distribute income to shareholders. Specifically, a company must meet the following requirement to qualify as a REIT. Firstly, at least 75% of total assets must be invested in real estate, cash or treasuries. Secondly, at least 75% of gross income must come from rents, interest on mortgage that finance real property or real estate sales. Lastly, a minimum of 90% of taxable income must be paid to shareholders in dividend each year. For more details on the matter REITs are halal or haram, Zahidah will join us live from Cyberjaya. Please welcome.
REITs, or Real Estate Investment Trust, was originated from the US in 1960 when the President Dwight D. Eisenhower signed into the law the REIT Act. It was a new approach to income-producing real estate investment which combined the best attributes of real estate with stock-based investment. It bridged the gap between the average and wealthy investor by enabling the former to tap into investment in large-scale commercial, residential, and industrial properties, otherwise dominated by the large financial intermediaries and wealthy individuals. This idea soon spread to countries outside the US. REITs in Malaysia can be traced back to decades ago. It began life as a property trust with the first listing in 1989 by Amanah Harta Tanah PNB, followed by the Arab Malaysian First Property Trust soon after. Property trust, however, never took off in the Malaysian market until its rebranding in 2005 to REITs and Security Commission's Malaysia introduction of guidelines to provide a legal framework for better monitoring for the newly introduced REIT. REITs in Malaysia are regulated by the Security Commission, which has issued a guideline on a real estate investment trust pursuant to Section 377 of the Capital Market and Service Act 2007, or it also known as CMSA. The guideline set out two things, which are the legal requirement for the formation of REITs in Malaysia and a requirement for issuing, offering or inviting any person to subscribe for or purchase units of the REIT. November 2005, the Malaysian government through Security Commission Malaysia issued guidelines for Islamic Real Estate Investment Trust (IREIT), setting a new global benchmark for the development of this instrument and making Malaysia the first jurisdiction to introduce such a guideline in the industry. This guideline provides guidance to market players on Sharia compliancy in developing and managing an IREIT. This guideline also served to complement the existing guideline on real estate investment trust. Basically, IREIT is the Sharia version of the conventional REIT, while REIT is a collective investment scheme in real estate that combines the best features of real estate and trust fund. Now, with me, Senior Executive Sharia Division Islamic Capital Market from Security Commission, Ms. AMILIN RASHADA. She will be share about the difference between REITs and IREIT. Please welcome.
Thank you so much for having me. Actually, the objective, administration, and the structure of Islamic REITs are quite similar to conventional REITs. However, there are some criteria that differentiate between both of them, which mainly due to the requirements to the strictly observe Islamic investment guidelines as well as Sharia principles. So, there are four main differences between both of them, which are in the existence of Sharia advisor, in terms of financing, insurance for properties, and the permissibility of activities that performed by the tenants. Firstly, regarding to the existence of Sharia advisor, as for conventional, there is no necessity for any Sharia advisor in conventional REITs. As for them, anything is legal. Compared to Islamic REITs, Sharia advisor must be appointed in Islamic REITs in order to advise the property manager against acquiring and investing property from non-permissible activities. Besides this, the difference can be seen in the form of in the term of insurance for properties. As for conventional, it uses conventional insurance along with conventional companies as permitted. Oppositely, Islamic REITs uses Islamic insurance, or also known as takafus schemes, to insure real estate. However, if the takafus schemes are not fully covered, it is permitted for Islamic REITs to use conventional insurance. In the meantime, the manager should be concerned about the availability of takafus schemes before going to conventional insurance. Last but not least, the third factor or criteria that they differentiate between both of them is in the term of financing. In the conventional REITs, there is no limitations or such requirements of financing, but in Islamic REITs, the financing must be compliance with Sharia requirements. And the last one, for the permissibility of activities that performed by the tenants, for conventional REITs, there is no limitations or requirements of activities performed by the tenants. However, for Islamic REITs, the manager shall make sure that the tenants will not involve or engage in any non-permissible activities such as gambling, conventional banking services, selling tobacco, and so forth.
Okay, before we continue, let's take a look at this one trader who shared her experience involved in IREITs.
For me, IREITs instrument is very suitable for investing because of its sources of income from Sharia compliant businesses. I am a novice investor in the world of investing, so this instrument is very suitable as it does not require high capital. REIT also have a high level of liquidity. I don't have to go through a lot of process and wait a long time to convert my asset into money. The most important factor is this instrument is managed by professional. As I am not yet fully proficient in investing, professionals are much needed to ensure that my investment runs smoothly. I have invested in Al-Aqah Healthcare since 2015 with share price RM1.57 per unit. The reason I invest in this instrument because Al-Aqah is the top 10 REIT Malaysia and it's under Sharia compliant. Al-Aqah has delivered stable growth revenue and distributable income to its unit holder. Also, Al-Aqah properties are leased under a long-term lease agreement with a term of 15 years and an option for renewal for another 15 years after expiration. A review of this lease is conducted once every 3 years, thus providing a stable rental return to its unit holder. It also has strength in sponsor, which is KPJ Healthcare Berhad, the largest unit holder of Al-Aqah with as much as 37.19% unit holding. Throughout my investment, I still receive profit even though there are fluctuations every year. I believe no matter the economic condition, healthcare rate would generally be an excellent defensive hedge as people will need healthcare services no matter the economic condition. And from my experience, investing in Al-Aqah rate is sustainable. similar to investing in real estate, with the goal of receiving dividend as well as capital gains through price increase. My hope on this Al-Aqah investment that the long-term income of Al-Aqah Healthcare remains stable, led by the stable performance of its healthcare asset, with distribution revenue estimated at 5.4%. Al-Aqah may offer rental rebates to its tenant in the second half of financial year 2021, as the performance of hospital will impact by the lockdown because of COVID-19. Looking beyond financial year on 2021, I did not expect that the rental rebate to recur in financial year 2022, as performance of hospital are expected to improve in 2022. To people out there who are interested to make an investment, I highly recommend you to invest in REITs as first step into venturing into the field of investing.
That very interesting sharing is from Miss NURAIN about her involvement in IRAD. What is Miss Amilin's opinion about the sharing just now? Maybe Miss can explain more about the actual structure of IRAD.
Yeah, for me actually it is good sharing for everyone. So, in the modus operandi of IRIDs, we have to know that there are a few characters who play important roles to ensure that the process of IRIDs is going smoothly. The characters include unit holder, fund manager, property manager, as well as Syariah Advisory Committee. So firstly, the process of IRIDs begins when the investor invests in IRIDs through the holding of units. This means unit holders will invest their funds to get high return. It is important to note that IRIDs only acquires real estate as its pool of assets. The examples of real estate include shopping mall, industrial properties, office retail, as well as hotels. Next, the fund manager will provide maintenance in conjunction with the management services of real estate. Then, IRIDs will generate the investment returns from the rental income where they are collected from the tenants plus any capital appreciation arising from holding real estate. Later on, unit holders or investors will receive their returns in the form of dividends and capital gains for holding period. Meanwhile, the trustee acts as the custodian of the fund in this modus operandi. And lastly, any establishment of IRIDs must have the Sharia advisor in order to screen the Sharia compliance of the operation.
Well then, thank you Miss Amilin for the explanations. It's clear that for Muslim investors who want to invest in REIT to choose Islamic Real Estate Investment Trust IREIT. It does not only offer Muslim investors the opportunity to invest with a peace of mind, but also the opportunity to obtain good return on their investment. Reporting from Cyberjaya, IREITs, I'm ZAHIDAH from Bulletin 5. Back to studio.
Thank you Zahidah for reporting from Cyberjaya on the existence of IRIDs and the difference with conventional REITs. And now we will continue to the availability of IRIDs in Bursa Malaysia, presented by NURUL Sabrina.
Alright, so if you are interested to make an investment, IREIT is the best choice for you. Ms. NURAIN had already mentioned the benefits of her investing in Al-Aqah Healthcare REIT. But not only that, IREIT also a rewarding investment as it offers return to their investors, such as offer high dividend distributions to their unit holders. To qualify for tax transparency status, an IREIT is required to distribute 90% or more of its total income to unit holders. Second is mixed portfolio of assets, which means it is much more diversified. Investors are able to diversify their risk profile by participating in a range of real estate and real estate related assets. So third, investors will get a stable return and IREIT is physically able to generate stable, sustainable income through rental income and capital appreciation, which can be used to continually pay regular dividends. And the last one is inflation hedge, which means the value of real estate is expected to generally increase in tandem with inflation rate. As we can see, Ms. NURAIN made her investment in Al-Aqah Healthcare REIT. Actually, we have 4 types of IREIT listed on Bursa Malaysia that you can choose to invest. So, the another 3 which are Aziz REIT, KLCC REIT, and As-Salam REIT. So we go first with Aziz REIT. Aziz Real Estate Investment Trust is Malaysia's first REIT listed on Bursa Securities on 3 August 2005 and classified as an Islamic REIT on 11 December 2008. It has a diverse portfolio of 58 properties that are located in the Klang Valley, Johor, Penang, Pahang, Negeri Sembilan, and also Kedah. Aziz REIT was formed to own and invest primarily in industrial and office real estate. The primary objective of the funds are to provide unit holders with a stable and growing distribution of income and to achieve long-term growth in the net asset value per unit of fund. Aziz REIT Manager Berhad is the manager of Aziz REIT and is licensed under the Capital Markets and Service Act 2007 as an Islamic fund manager to manage an Islamic REIT. Second is KLCC REIT. KLCC REIT is Malaysia's largest real estate investment trust and is part of a staple security together with KLCCP, forming the only staple security in the country. KLCC REIT is an Islamic real estate investment trust established to own and invest primarily in Sharia-compliant real estate for office and retail purposes. The fund was constituted by the date 2 April 2013 entered into between the manager and the Maybank trustees Berhad. The deed was registered and logged with the Securities Commission on 9 April 2013 and the fund was listed on the main board of Bursa Malaysia Securities Berhad on 9 May 2013. So, the objective is to provide the unit holders with regular and stable distributions, which is supported by KLCC REIT's strategy of improving returns from its property portfolio and capital growth while maintaining an appropriate capital structure. So, this is a few features of KLCC REIT, which is name of the fund is KLCC REIT, fund type income and growth, fund category is Islamic Real Estate Investment Fund. Approved fund size is 1,805,333,083 units. Their manager is KLCC REIT Management Sendirian Berhad. The trustee is Maybank Trustees Berhad. So the investment policy is to invest directly and indirectly in a Sharia-compliant portfolio of income-producing real estate and primarily for office and retail purposes in Malaysia and also overseas. And the last one is As-Salam REIT. As-Salam REIT is a Sharia-compliant fund with principal activity to invest in diversified Sharia-compliant properties. As-Salam REIT's properties with diversified portfolio are strategically located across Malaysia. As-Salam REIT embarks its milestone by being listed on the main board market of Bursa Malaysia Securities Berhad on 29 September 2015. Starting with 31 properties in 2015, As-Salam REIT has expanded its portfolio to 55 properties across Malaysia, comprising 3 retail malls, an office building, 44 food and beverage restaurants, and also 7 food and beverage non-restaurant assets. Damansara REIT manages Sundian Berhad, DRMSB, the manager of As-Salam REIT, is a subsidiary of Johor Corporation Group of Companies. The RMSB is licensed under Capital Markets and Services Act 2007 to manage Islamic REIT. So, based on the 4 types of IREITs in Malaysia, you can choose which is the best type for you.
And that's the clip presented by Nurul Sabrina. As we can see that in Malaysia, REITs is something common, and to catch up with the revolutions of Islamic finance, Bursa Malaysia has come out with iREITs. The guidelines were published in November 2005, setting a new global benchmark for the development of this instrument and making Malaysia the first jurisdiction to introduce such guidelines in the industry. For iREITs to be halal, the income must come from Sharia permissible activities, or in the situation of mixed activity, the income must adhere to the 20% benchmark as determined by the Sharia Advisory Council of Security Commission. Meanwhile, the conventional REITs is haram and non-Sharia compliant because it contains the element of riba. In Surah Al-Baqarah verses 278 to 279 says, O you who believe, fear Allah and give up what remains due to you of riba. If you are in the truth believer, and if you do not, then be warned of war against you from Allah and His Messenger. But if you repent, you may have your principle, thus you do no wrong, not are you wrong. As it was clearly stated that riba is haram in Islam. Riba is defined as any promise of benefit the lender receives in return for lending. Accordingly, interest on debt fits the definition of riba and is therefore haram in Islam. So we as Muslims want to avoid investing in things wherein the business of this thing is reliant on interest. In the case of mortgage rates, where the business is simply profiting from the difference in interest rate between short and long-term debt, their businesses is definitely reliant on interest and therefore haram to invest in. Meanwhile, as for equity REITs, primarily make their money through collecting rent and trading in properties, there is nothing wrong from an Islamic perspective with either of these activity. To wrap up the debate on the REITs are halal or haram, it is safe to say that conventional REITs contains element of riba that is against the Sharia law, and Islamic REITs is Sharia compliant with no doubt. The choices to invest in which activity is on you. And that's all from Bulletin 5 for today. Till we meet again next time, thank you.